You're watching Silver News Daily. Subscribe for more. Could silver really be on the verge of a massive rally that could collapse banks and the US dollar? Market experts like Mario Inneco believe it's not just possible, but imminent. Imagine silver prices skyrocketing by 500%, transforming the financial landscape as we know it. In today's video, we're diving deep into why silver might just be getting started on a historic run, and how it could lead to unprecedented upheaval in the banking sector and the value of the dollar. Stay tuned to discover the surprising factors driving this bold prediction and what it means for your financial future. And don't forget to subscribe to our channel for more insights on this unfolding financial drama.
Currency collapses and crisis and economic chaos and debt problems. If you go back to the French Revolution, they called it the Reign of Terror. There's a, everyone knows about the guillotine during those days. It was politically very unstable, and then eventually a strong man came out of that called Napoleon Bonaparte. And the same thing happened just over 100 years ago in Germany. We had war, and then the German Empire collapsed. The Emperor Kaiser Wilhelm abdicated, and Germany became politically chaotic. There is talk that Bavaria was going to break away from the German Empire, and there's loads of political assassinations. And it's all to do with the currency. When the currency becomes almost worthless, society becomes chaotic, and it's just a reflection of the currency. And I think the same thing is happening not just in Slovakia, but look at the United States. There's huge division politically, and I think that's all to do with the currency as well. Here in the UK as well, there seems to be no hope that either party can do anything good. So, for example, we're going to have the general election sometime this year, but even if the Labour Party were to win, most people don't expect anything better. So, yeah, I think that's what it means. And if you look at like South American countries, for example, they've always been very politically unstable, military coups and everything, revolutions, and they've never had sound currency, at least for the last 100 years. So that's why I think is one of the symptoms. The other symptom, of course, is, societal mores or morality that goes down the drain, the rule of law. Here in the UK, for example, I saw the other day, there were these Just Stop Oil protesters. They're like these green climate change people. They blocked the road so people can't drive to work. And this truck driver came out of his truck in central London, and he just pushed the people on the floor, off the road. And guess what? The police came and arrested him. They didn't try to get the people off the road so people could drive. So it's all like symptoms of that, in my opinion. And
to understand why experts are predicting such a dramatic rise in silver prices, it's essential to look at the historical context. Silver has had a wild ride over the past few decades. Back in 1980, silver prices skyrocketed to nearly $50 an ounce during a period of high inflation and economic uncertainty. Fast forward to 2011, and we saw another significant rally where silver again approached the $50 mark. These historical peaks were driven by a combination of high demand, economic instability, and investor sentiment. In more recent years, silver has experienced significant volatility. For instance, during the height of the financial crisis in 2008, silver dropped to as low as $9.17 an ounce. However, it rebounded spectacularly to over $48 an ounce by 2011, representing a staggering increase of over 500%. This shows that silver has the potential for dramatic price movements, often reflecting broader economic trends. Currently, silver is trading around $31 an ounce, having struggled to maintain its rise due to market fluctuations and resistance levels. However, this price point is significant as it indicates a potential basing pattern, setting the stage for another major rally. Understanding these historical trends is crucial as they provide a blueprint for what might be coming next. The pattern suggests that when silver breaks out, it can do so in a big way, often leading to substantial gains in a relatively short period. Stay with us as we delve deeper into the current market conditions and the expert predictions that are fueling this bullish outlook for silver. And remember, if you're finding this information valuable, please subscribe to our channel for more in-depth analysis and updates.
But the politicians, I think they're just reacting. I don't think they can think that, that well about, well, what we're actually doing is destroying the currency so we can bring this in. I think, though, there has been a long-term plan to go off. The bankers want to control everything. So you have to first you start with gold and silver coins, which they don't have total control over. So how do they stop that? Well, they stopped it, about 100 years ago with World War I, World War II. They racked up a lot of debt. They took off gold and silver off circulation, but they allowed you to still keep these promissory notes, which were for gold and silver. And people think nowadays that that's a good thing because you have privacy, and to some extent they do. But now they want even more control. They want to get rid of these empty promissory notes and have nothing. So, it could be that it's a plan, and that they're going to try hard to implement it. But I think a lot of people are waking up. 20, 30 years ago, if they tried this, they couldn't really try it because the system was still very stable. But now with the internet, with everyone, me talking to you, you are in the States, I'm in the UK. You can talk to people all over the world. People are waking up. So my hope is that, they might try to bring in CBDC, but it will be a big failure, in my opinion. It's a little bit like when they had the French Revolution. They brought in the assignats, and when that was just about failing, they tried something new called the mandat territorial, and that didn't even get off the ground. It collapsed almost as they issued it. So that's my hope. People will wake up and say, why should we listen to these central bankers who destroyed the last system? And now, why should we, accept their solution to what they did?
Now that we've looked at the historical context, let's examine the current market conditions that are setting the stage for what could be an explosive rise in silver prices. As of today, silver is trading around $31 an ounce. Recently, it has struggled to maintain upward momentum, facing significant resistance and exhibiting signs of a potential bearish correction. Analysts are watching closely to see if silver can break above critical levels like $31.85 and $34.70, which would signal a strong bullish trend. However, the story doesn't end there. Silver's price movements are closely tied to the US dollar's performance. A weaker dollar generally supports higher silver prices, and recent geopolitical tensions, particularly in the Middle East, have created a climate of uncertainty that benefits safe haven assets like silver. As tensions escalate, investors seek refuge in tangible assets, driving up demand for silver. Moreover, economic indicators in the U.S. are providing mixed signals. The Federal Reserve's hawkish stance on interest rates suggests a potential delay in rate cuts, which could strengthen the dollar and apply downward pressure on silver. Yet, the broader economic environment, including factors like consumer confidence, inflation data, and GDP growth forecasts, continues to influence market sentiment. Traders are particularly focused on upcoming economic data releases and speeches from Fed officials, which could significantly impact silver prices. A persistent hawkish tone from the Fed could bolster the dollar, but any indications of easing could ignite another rally in silver. In summary, the current market conditions are a complex interplay of technical resistance levels, the strength of the US dollar, and broader geopolitical and economic factors. All these elements combine to create a volatile environment where silver could either face significant corrections or break out into a substantial rally. Stay tuned as we dive into expert predictions and analyses that suggest why many believe silver is just getting started on its upward journey. And don't forget to subscribe to our channel for ongoing insights and updates on this evolving story.
And I've spoken to my wife about it, but the older I get, the more I realize that is there really somewhere better, or it's the old saying about the better the devil you know. But right now, I mean, I think if I was younger and my wife was willing to move, probably Argentina looks like a good place, even though Milei seems to be, he seems to be doing some good things. Yeah, Argentina seems to be a good place because a lot of people don't realize Argentina is probably the most European of the South American countries. So, and over 100 years ago, it was one of the richest countries in the world. So I think it's got a lot of potential. Or maybe the other option would be to go east. I think countries like Singapore and even, I don't know, I mean, China, if you could go there. I know that's controversial, but China seems to be booming. But right now, there's so much geopolitical tension that you probably don't want to go to China or Hong Kong. But Singapore is a very good place. Their currency has been probably outside the Swiss franc has been the strongest currency in the last 50, 60 years. They're very stable. But the problem is Singapore is a very small place. It's like a city state, and it's probably very expensive. A lot of UK or British people are going to work in Dubai, very low taxes, but the weather there, it's always very hot. So if you like the seasons, that's not a good place. And I see a lot of people going to Thailand mainly because it's very cheap with with your pound or your dollar. But yeah, so that's where I would say like Argentina, Thailand, Singapore, those kinds of places.
Now let's delve into the expert predictions and analyses that suggest silver is poised for a major breakout. Market experts like Mario Inneco and analysts from Investing Haven have long been bullish on silver. Investing Haven, for instance, has maintained a target of $34.70 for silver for several years. This target, once considered overly optimistic, is now within striking distance as silver hovers around $31. Many analysts believe that reaching $34.70 is not an endpoint, but rather an acceleration point that could propel silver much higher. Mario Inneco, a prominent voice in the market, predicts that silver's current trajectory could lead to a massive rally, potentially reaching $50 an ounce in the not-so-distant future. This forecast is grounded in both technical and fundamental factors. Technically, silver has formed a long basing pattern, which typically precedes a significant price breakout. The longer the basing pattern, the higher the upside potential once the breakout occurs. From a fundamental perspective, the silver market is influenced by a combination of supply constraints and increasing demand. The Silver Institute's recent reports highlight a growing supply deficit, with demand outstripping supply for the fifth consecutive year. In 2023, the deficit was over 142 million ounces, and forecasts for 2024 indicate that this shortfall could nearly double. This supply-demand imbalance is a crucial factor that could drive silver prices higher. Additionally, the weakening U.S. dollar and geopolitical tensions are contributing to a favorable environment for silver. A weaker dollar boosts silver's appeal as an alternative investment, while global uncertainties push investors towards safe haven assets. Moreover, experts emphasize the importance of the gold-to-silver ratio, which currently suggests that silver is undervalued relative to gold. Historically, this ratio tends to revert to its mean, implying substantial upside potential for silver compared to gold. In conclusion, a combination of technical chart patterns, supply-demand dynamics, and broader economic and geopolitical factors supports the bullish outlook for silver. Experts believe that once key resistance levels are breached, silver could see rapid price acceleration, potentially reaching $50 and beyond. Up next, we'll explore the critical role of the U.S. dollar and how its movements could impact silver's trajectory. But before we continue, make sure to subscribe to our channel for the latest updates and in-depth analyses on this unfolding financial story.
Close to that level, and I think it was just a matter of time. And the other thing I was watching was the premium with the Shanghai Futures Exchange, and I think silver closed today at $32.95 equivalent. So as I've said, I think before with you that the price now has been set in the Far East. And this 30 level, of course, is just like the beach ball getting out of the water, popping out. That's where the line was, and we got up to 30.83 this afternoon in the spot price. Right now, we're at 30.63. And gold as well is at 24.15, so it's back above 2400. And I think what it shows is that the new all-time high in gold is being confirmed in silver because we've got a new, let's say, 3.5 year high or so in silver. And that's why I think silver can move very quickly to confirm the all-time high in gold. But in terms of all-time high in silver, and we know what that price is, it's $50. So I don't think it's going to take that long to get to 50. I know it's taken a long, 3.5 years almost to get back around 30 and above 30. But I think things are going to really accelerate. Data-wise and reason for this happening, I don't think there is much. One thing, though, I would say, geopolitically, the meeting between Xi Jinping and Vladimir Putin. Vladimir Putin flew to Beijing yesterday. I think it's very significant. It's showing that Russia and China are both behind, each other, and it's a strong message to the West that they're going to do everything to move forward with their alternative multipolar world, and I think this is reflected in the precious metals a bit because it means a weaker dollar.
Let's take a closer look at how the US dollar's performance directly impacts silver prices and what this means for the future. Silver prices and the US dollar share an inverse relationship. When the dollar weakens, silver typically strengthens, and vice versa. This dynamic is crucial to understanding the current market outlook for silver. Recently, the US dollar has been under pressure due to a combination of factors, including geopolitical tensions, economic data, and Federal Reserve policies. Geopolitical events, such as ongoing conflicts in the Middle East, have led to increased market uncertainty. In such times, investors flock to safe haven assets like silver, which boosts its demand and price. Simultaneously, a weaker dollar makes silver cheaper for investors holding other currencies, further driving up demand. Economic indicators from the U.S. also play a significant role. For example, the Federal Reserve's hawkish stance on interest rates aims to combat inflation, which in turn supports a stronger dollar. However, persistent inflation and the potential delay in rate cuts could weaken the dollar, providing a tailwind for silver prices. The recent drop in expectations for a Federal Reserve rate cut in September underscores this uncertainty. Moreover, upcoming U.S. economic data, such as consumer confidence, GDP growth, and inflation metrics, will be closely watched by traders. Strong economic data could bolster the dollar, putting downward pressure on silver. Conversely, weaker than expected data could lead to a softer dollar, supporting higher silver prices. Another critical factor is market sentiment. The broader market perception of the dollar's future can drive silver prices. If investors believe the dollar will continue to weaken due to economic policies or geopolitical instability, they are more likely to invest in silver. In essence, the future movement of silver prices is intricately linked to the performance of the US dollar. Given the current economic and geopolitical landscape, many experts anticipate a weakening dollar, which would be highly supportive of a silver rally. Up next, we'll delve into the supply and demand dynamics for silver and how they could fuel its price surge. Stay with us for more insights, and if you're finding this information valuable, make sure to subscribe to our channel for continuous updates and analysis.
They did well up until recently because the central banks were able to use this strategy called QE or money printing, and people bought into it for the last 15, 20 years, and it helped keep money cheap, helped keep the currency strong because the bonds that backed this currency, the government bonds, the debt, were always going up and up in value, and the rates were going down. But now everything's turned, in my opinion. And with the bond market turning, that means the currency is turning down. And like you said, a lot of the so-called value, not even value, but the phony wealth that's been created over the last 30, 40 years A lot of that is going to flow into real things, and I think real things like gold, silver, commodities have been heavily undervalued, and it's just a rebalancing.
Now let's explore the supply and demand dynamics for silver, which are critical in understanding why silver prices might be on the verge of a significant rally. The Silver Institute recently released its 2024 World Silver Survey, revealing that silver demand has outstripped supply for the fifth consecutive year. In 2023, the supply deficit was over 142 million ounces, and the forecast for 2024 indicates this shortfall could nearly double to 265 million ounces. This growing deficit is a major factor driving the bullish sentiment around silver. One of the key drivers of this supply-demand imbalance is the increasing industrial demand for silver. Silver is not only a precious metal, but also an essential industrial component. It is used extensively in electronics, solar panels, medical devices, and various high-tech applications. As industries expand and technological advancements continue, the demand for silver in these sectors is expected to rise. On the supply side, silver mining and recycling have struggled to keep pace with the increasing demand. Mining production has faced numerous challenges, including regulatory hurdles, higher operational costs, and a lack of new discoveries. Meanwhile, the existing above-ground silver stocks, such as those in COMEX and LBMA vaults, have been dwindling. COMEX vault inventories, for instance, have decreased significantly from their peak in 2021. Additionally, investor demand for silver has been robust. Economic uncertainties and fears of inflation have driven investors towards tangible assets like silver. The popularity of silver ETFs and physical silver products, such as coins and bars, has surged. However, potential issues like double counting of silver inventories in ETFs raise concerns about the actual available supply. This tight supply situation is further exacerbated by geopolitical uncertainties, which often lead to increased safe haven buying. Investors seeking to protect their wealth from currency devaluation and economic instability turn to silver, boosting its demand even further. In summary, the combination of rising industrial demand, declining mining output, and strong investor interest creates a perfect storm for silver prices. The supply-demand dynamics are heavily tilted in favor of higher prices, making silver a compelling investment. Next, we'll delve into the geopolitical and economic factors that further influence silver prices. Stay with us as we continue to unpack this complex yet fascinating market. And don't forget to subscribe to our channel for ongoing insights and updates.
I think what Biden did to this small oil company was pretty disastrous. It did help the big oil companies, but the national debt, I mean, there's only two solutions, well, not even two, but the only solution, and this would totally collapse the United States post 1787, because the U.S. is still under that constitution, but the national debt has become so huge that the only way to solve the problem is to just pull the plug. And you pull the plug, the whole thing implodes, and but there's going to be a lot of people suffering, because that national debt is used to back a lot of government programs like Social Security, Medicare, Medicaid, all the military, the millions of people that depend on the military. It would be a mess. What's the other thing that they can do? Well, they can just keep trying to kick the can down the road. But I heard that Jay Powell, he was in Amsterdam the other day, and he said that everyone knows that the deficits in the national debt are unsustainable, and if nothing is done fairly quickly, it will be a huge problem. So no, I don't think Trump will. Maybe Trump will orchestrate the collapse and then bring something new, but I'm not too sure, because when he was president, I think 2019, the budget deficit was over 5%, and he was even pushing the Fed to lower rates and do more QE. So I don't think it will be much different fiscally.
Let's delve into the geopolitical and economic factors that are influencing silver prices and adding fuel to the potential rally. Geopolitical tensions have always played a significant role in driving investors towards safe haven assets like silver. Currently, ongoing conflicts in the Middle East, particularly the escalating conflict in Gaza, are contributing to market uncertainty. This instability makes silver an attractive asset for investors looking to hedge against geopolitical risks. For instance, recent airstrikes and political unrest in the region have heightened fears of broader conflicts, prompting a rush towards safe haven investments. Moreover, the global economic landscape is fraught with uncertainty. Inflation rates are high, and central banks around the world, especially the Federal Reserve, are adopting hawkish policies to combat this. The Federal Reserve's stance on interest rates is critical. A delay in rate cuts or more aggressive rate hikes could strengthen the U.S. dollar temporarily, but persistent high inflation and economic slowdown fears could weaken the dollar in the long run, making silver more attractive. In addition to these factors, the economic performance of major markets like China and Europe also impacts silver prices. China's economic policies and its strategic partnership with Russia play a significant role in global commodity markets. Recently, a meeting between Xi Jinping and Vladimir Putin underscored the strengthening of this alliance, sending signals to the West about their commitment to a multipolar world order. This geopolitical realignment could lead to a weaker dollar as countries diversify their reserves away from the U.S. currency. On the economic front, upcoming U.S. economic data, including consumer confidence, core PCE, and speeches from Fed officials, will be closely monitored. Positive data could bolster the dollar, putting pressure on silver. Conversely, disappointing data could weaken the dollar, supporting silver prices. It's also important to consider the impact of global supply chain disruptions and energy prices. Rising energy costs and supply chain issues can affect mining operations, leading to reduced silver output and higher prices. Additionally, policies related to green energy and technology, which heavily rely on silver, further drive demand. In summary, a complex web of geopolitical tensions and economic factors is influencing the silver market. The ongoing conflicts, economic policies, and strategic global alliances are creating an environment ripe for silver to act as a safe haven asset. Investors need to stay informed about these developments as they significantly impact silver prices. Up next, we'll discuss the role of central banks and their policies on silver prices. Stay tuned for more insights, and if you're finding this information valuable, please subscribe to our channel for continuous updates and in-depth analysis.
The U.S. has gone so far in extending itself fiscally, monetarily, and the economy in the U.S. as well. They've exported all the industry to China and a lot of other countries. So I think it's too late. And we've seen that what they've tried to do with their allies in vis-a-vis Russia and the Ukraine is totally backfiring. So, and for the American people, actually, I think the best thing long term is for the central government, the politicians, that the deep state to fail. And it will be painful, but longer term, it will be the best thing. And I would say cooperating with every country in the world and trying to trade with them peacefully is the best thing. So, yeah, I don't think the U.S. will be able to stop BRICS, and because there's so many countries that want to join, and it's like snowballing.
And if our viewers are interested in learning more and continuing to track this with you, where can they find you, Mario?
Yeah, Inneco64 on YouTube. That's the best place. I make a video there, every day, sometimes two. I do a live stream every Sunday at 5 p.m. Eastern Time. And I'm also on Twitter at Inneco1964.
Fantastic. Well, we really appreciate your time, Mario. Any last thoughts before we let you go?
As ever, just know what's happening and don't worry about things. And
now let's examine how central bank policies, particularly those of the Federal Reserve, impact silver prices and what we can expect moving forward. Central banks, especially the Federal Reserve, wield significant influence over financial markets, including the precious metals market. Their monetary policies, interest rate decisions, and economic outlooks are key drivers of silver prices. Recently, the Fed has maintained a hawkish stance to combat persistent inflation, which involves raising interest rates and tightening monetary policy. This approach typically strengthens the U.S. dollar and puts downward pressure on silver prices. However, there's more to the story. The Federal Reserve's actions are closely tied to the broader economic environment. If inflation continues to run hot, the Fed might be forced to keep rates high for longer, potentially leading to an economic slowdown or recession. In such scenarios, investors often flock to safe haven assets like silver, anticipating a weaker dollar and higher inflation, both of which are supportive of higher silver prices. The minutes from recent Fed meetings indicate a cautious approach, acknowledging that while inflation remains a concern, there are risks to economic growth. If economic indicators start to signal a significant slowdown, the Fed might pivot towards a more dovish stance, cutting rates to stimulate the economy. This shift would likely weaken the dollar and boost silver prices. Moreover, the global context matters. Other central banks around the world are also grappling with inflation and economic challenges. For instance, the European Central Bank and the Bank of Japan have their own monetary policies that impact global liquidity and investor sentiment. Coordinated or divergent actions by these central banks can create volatility in currency markets, indirectly affecting silver prices. Another critical aspect is the quantitative easing, QE policies. In the past, massive QE programs have flooded markets with liquidity, devaluing fiat currencies and driving investors towards precious metals. While we are currently in a phase of tightening, any future economic crisis could prompt central banks to revert to QE, once again boosting silver prices. Furthermore, the long-term credibility of fiat currencies is under scrutiny. With mounting national debts and deficits, particularly in the U.S., there are growing concerns about the sustainability of current monetary policies. This skepticism drives demand for tangible assets like silver, seen as a hedge against currency devaluation and economic instability. In summary, the interplay between central bank policies, economic conditions, and investor sentiment creates a complex environment for silver prices. The actions and signals from the Federal Reserve and other central banks will be pivotal in determining the future trajectory of silver. Investors should closely monitor these developments, as they provide critical insights into potential market movements. Stay tuned for our final section, where we'll bring all these factors together to explain how silver could lead to a major financial upheaval and a 500% rally. And remember to subscribe to our channel for continuous updates and expert analysis. After examining all the factors influencing silver, it's time to bring everything together and understand how silver could spearhead a financial upheaval and potentially see a 500% rally. Experts like Mario Inneco and many others believe that we are on the cusp of a historic run for silver. The technical analysis shows a long basing pattern, which often precedes a significant breakout. Silver's approach to critical levels like $34.70 and the potential to reach $50 marks the beginning of this upward trajectory. Fundamentally, the supply and demand dynamics are overwhelmingly in favor of silver. The persistent supply deficits, coupled with increasing industrial and investment demand, create a strong foundation for higher prices. As we've seen, the Silver Institute reports a growing supply shortfall, which could nearly double in the coming year, driving prices higher. Geopolitical tensions and economic uncertainties further enhance silver's appeal as a safe haven asset. The ongoing conflicts and shifting global alliances are likely to continue driving investors towards silver, seeking protection against market volatility and currency devaluation. Central bank policies play a crucial role in this narrative. The Federal Reserve's stance on interest rates and its potential pivot to a more dovish approach in response to economic challenges could weaken the U.S. dollar, providing additional support for silver prices. The broader skepticism about the sustainability of fiat currencies amidst mounting national debts and deficits adds another layer to silver's attractiveness. All these factors combined set the stage for silver to not only rise but potentially lead to significant financial disruptions. A major rally in silver prices could undermine the stability of banks and the value of the U.S. dollar, triggering a domino effect in the financial markets. Such a scenario could indeed result in a 500% increase in silver prices, as market dynamics shift dramatically. In conclusion, while the idea of silver spearheading the collapse of banks and the dollar might seem far-fetched, the convergence of technical, fundamental, geopolitical, and economic factors makes it a plausible scenario. Investors need to stay vigilant and informed, as the unfolding developments could present unprecedented opportunities and challenges. Thank you for joining us on this deep dive into the silver market. If you found this information valuable, please subscribe to our channel for more insights and updates on financial markets and investment strategies. And remember, this is not financial or investment advice. Always do your own research before making any investment decisions.